The Economic Recovery and Growth Plan is medium-term plan for 2017 to 2020, developed by the administration of President Muhammadu Buhari for the purpose of restoring economic growth. Nigeria entered an economic recession that was caused by many factors in the second quarter of 2016. Now, the current administration recognizes that the economy is likely to remain on a path of steady and steep decline if nothing is done to change the negative trajectory. It is in this context that the government developed the ERGP to tackle the causes of recession and ultimately change the national economic trajectory in a fundamental way. But how far has this plan come along in changing Nigeria's dwindling economic status? Dr. Terfa Abraham is in the studio to discuss this with us. Welcome to the show.
Thank you very much. My pleasure.
Welcome.
Thank you very much.
So, would you say the aim of this ERGP, has been achieved?
Well, when this administration came on board 2015, usually they are sworn in around May 29th, as at then, before he moved it to June 12th. So already the budget for that year was already running. So President Muhammadu Buhari added a supplementary budget so that he can have a context of how his administration can complete 2015. And what he did then basically was to raise a supplementary budget to augment for fuel subsidy and to pay for other things that need the economy to run smoothly. So that completed 2015. So for 2016, the administration was still trying to put his hand on the table to understand what blueprint he can use to run the economy. So for 2016, which was the first fiscal year that the Muhammadu Buhari administration had a full budget to run, he introduced what they called strategic implementation plan, the SIP, for the 2016 fiscal year. So before the 2016 ran out, Nigeria economy went into a recession. So 2017 to 2020 became a nice period for the administration to come up with the Economic Recovery and Growth Plan. And that's why the ERGP, as it's popularly called, covered 2017 to 2020. And its first objective was to take the Nigerian economy out of recession. That was the first aim. Now, by 2020, it was expected that we'll begin to consolidate on the gains of the ERGP, both for growth, for addressing inequality, for job creation and things like that. But COVID-19 hit and then rolled back the Nigerian economy down to under recession. So in terms of success, the ERGP succeeded in bringing the Nigerian economy out of the 2016 recession. But in terms of achieving that sustainable growth across all macroeconomic indices, low inflation rate, low interest rate, steady economic growth, that was not achieved because of the impact of COVID-19 that rolled our economy back and the struggling challenges of revenue to fund all the projects that were needed to achieve the desire of the ERGP. So one short answer, the ERGP succeeded in bringing the Nigerian economy out of the 2016 recession, but the COVID-19 impact rolled that effort back and then created a room for new economic initiative for the administration.
Okay, now the ERGP is set to expire in December this year, and now there is a plan by the federal government for a national development plan. Do you think this is realistic, or do you see something positive coming out of this? Okay,
don't forget we said the ERGP was 2017 to 2020. So when COVID-19 came, the administration quickly introduced what they call Economic Sustainability Plan. That Economic Sustainability Plan was like the extension of the ERGP for 2021. So you are correct there. It elapses December 2021, but not the ERGP now, but the ESP, the Economic Sustainability Plan. So before the ESP will run out, this administration had already launched the medium-term national development plan that has about $340-something billion naira to implement projects in the medium to short term as a way of putting on the table a medium-term development plan for Nigeria. Basically, what we do with the annual budget is like a one-year plan. But that one-year plan is connected to the medium-term expenditure and fiscal strategy paper, which is like the MTEF. But that MTEF is a rolling document. It is not a medium-term plan per se. So the medium-term national development plan is filling that vacuum of giving Nigeria a medium-term plan so that we can connect our one-year budget to, and then overall, that medium-term national development plan will be connected to the overall goal of the SDGs, which is by 2030. So as the ESP wraps up in December, the administration has already launched that medium-term development plan, so that we can begin to see where the ESP stopped and what we can feed into the medium-term development plan towards ensuring that the growth we are recording so far. Don't forget, we came out of a growth of 0.11% in December 2020 to 0.51% in first quarter 2021 to 5.01% as of June 2021. So the aim of the administration, not to allow any gap between these economic development plans, is to ensure that the gains we are getting, we consolidate on them so that we can sustain it. Because the way economics works is that once there's vacuum in policy direction, economics and the economy interprets it as regulatory risks and uncertainty, because there's no plan, nothing to base our business models and consumption pattern on. So bringing out this plan was just timely, so that it won't create any vacuum between the ESP transiting into the medium-term national development plan.
Now, when the COVID-19 hit and the country came to a halt because people stopped working, people stopped producing, even investments stopped coming in. Now, in your honest opinion, would you say Nigeria is in a recession or a depression?
Well, the COVID-19 was a global pandemic, and it affected economies of the world through halting access to supplies. What you wanted was not coming, and what you are supplying, nobody was buying. So with this, there was like a choke in the economic blood flow system. The economy is like a human being that blood runs through the vein and supplies every part of the body with blood to stay healthy. So with COVID-19, people producing could not sell. Those wanting to consume could not have access to the market. So that created a lot of halted supply and demand channels, and then created unemployment, created gap even in having access to basic needs, goods and services. So what happened is that prices went up, and the revenue to sustain our economy was not there. But this administration tried in terms of ensuring that people who stayed at home, especially for government workers, were still paid. If that payment didn't happen, the Nigerian economy would have shut down completely. So the Nigerian economy is not did not go into a depression. Rather, it went into a recession as with the whole world, as other economies went. But it came out quickly as soon as with the shutdown, the lockdown stopped, and people resumed selling, buying and selling continued. Basically, that's just what happened. That's why we came out of the recession. It was like a V-shaped recession. A V-shaped recession, you drop into a hole and you come out fast. And that's why it went fast from 0.11% up to 5.01% in the space of 6 months. So it was a recession that was driven by the COVID pandemic. But we came out of it because the economy opened and global demand and supply activities continued. But in terms of our external balance, how Nigeria trades with the rest of the world, it depends on how much the rest of the world take in, accept COVID-19 vaccination. Because trade at the global level, Nigeria, US, Nigeria, UK, Nigeria, Europe, and the rest of the world depends on how much trust those other economies have for African countries in terms of vaccination or no vaccination. So in terms of expanding our access to global trade, COVID-19 vaccination rate has a big role to play. But within our own economy, so long as you stay within the confines of keeping safe, following all COVID-19 protocols, and you can still open and buy and sell, for now our economy will still be achieving that growth within the domestic level. But to have that external sector contribute, it depends on factors such as volatility in crude oil price and other factors that depends on international trade.
Okay, now the Ministry of Budget and National Planning is supposed to oversee, the implementation of the ERGP plan. Would you say they've lived up to that mandate?
The Ministry of Budget, Finance and National Planning has a privileged role of serving. It's positioned to be like the coordinating ministry of all other ministries. And it's for a simple reason. That ministry houses national planning, that ministry houses finance, houses budget. National planning has the big picture, 10-year, 20-year, 15-year plan. National planning knows every development plan, from climate change plan to national gender policy to every other plan that we have. that ministry knows everything about it. And then it has a way of making all other sectors in this context now is those other ministries like health, education, agriculture. So the Ministry of Finance, Budget and National Planning has a way of making those other sectors fall in line in terms of programming their projects and programs towards attaining the overall big picture. Then the Finance Ministry has the power to grant approval for ministries that are traditional executive ministries, departments, and agencies. The Ministry of Finance gives their how will I say it now? Approves their capital spending through a warrant. Therefore, those that are on first line charge, it approves their spending through the presidency by giving them authority to incur expenditure. So in other words, the Ministry of Finance, the point I'm trying to make there, has the power to always check if ministries are falling in line in terms of expenditure allocation towards attaining the overall big picture or not. Then the Ministry of Budget also releases the budget call circular that all other MDAs prepare their budgets based on. So you see, the ministry has a very big role. So that ministry, in terms of overseeing the implementation of the ARGP, certainly has done its best, in my opinion, because for every budget year, that ministry releases the budget call circular where it states the expenditure ceilings, it states the public procurement rules and everything that MDAs need to also mention. Even the 2022 budget that we already have, the Ministry of Finance, Budget and National Planning already made reference to the medium-term National Development Plan, insisting that MDAs align their project to that medium-term development plan, even before it was launched. Then that budget call circular also made it clear that MDAs this time around should prepare their budget in a manner that will favor gender-responsive projects and programs. So this is the best the ministry can do. Then it also has the power of checking whether MDAs are complying each time it's time for their monthly releases, either through warrant or authority to incur expenditure. But in the meantime, that's the best the ministry can do. It now requires the head of other MDAs to also understand what it means to run an economy, so that they too can fall in line. In an economy, your hand cannot be doing what it likes and your leg cannot be doing what it likes. An economy is like a human system. Every sector must function in tandem, like the Japanese flying goose theory, where you have one bird leading and the rest following like a triangle. That's how an economy works. The moment your hand wants to do something else, imagine the way we say it normally, the body is willing, but the spirit is not. You have to try and get them into equilibrium. So the Ministry of Finance, Budget and National Planning is that ministry that must make sure all other sector falls in line. You know, under President Jonathan, they attempted to call that ministry the Prime Minister. You know, they call it like the coordinating ministry. If as much as that seemed funny at the time, that is the reality of what that ministry does. It ensures that every 1 month, 3 months, 6 month program you are implementing, it falls in line into the overall big picture. So in terms of implementing the ERGP, in my opinion, they did their best.
Okay, now, do you think our government policies, will help with the economic recovery process?
Well, certainly, the way, still on the economy runs based on policy dictates. Okay, so one thing the president is doing this time around that was better than what he did in 2015. In 2015, there was a lot of delay in announcing ministers. There was a lot of delay in knowing who the cabinet heads will be, who is minister of this, minister of that. That may look very simple to people that don't understand how the economy works. But for economists and those who watch the economy, delaying having ministers means that you have a huge uncertainty about a sector. And until there's a minister, you cannot predict policy direction. Therefore, it's difficult to begin to plan your investment or consumption pattern. So the lesson this administration has learned from 2015, I think so, is that this time around, you can see that even before the ESP elapsed, we're already in November, for the first 2 weeks, they've already launched the medium-term National Development Plan. That wasn't what they did in 2015. And in as much as lack of revenue was what made Nigeria to go into 2016 recession, policy uncertainty by delaying the announcement of ministers served as a propeller to take the Nigerian economy into recession. Because when there's a recession, what that means is that there is demand gap, there's supply gap that only investors can fill with production, with services. But you are not announcing ministers. So those investors who need to take decision cannot predict what your economy will do. So in the meantime, while they halt production decision, you are halting job creation, you are halting supply of goods and services. Prices will be climbing up. For the few goods available, those selling will raise the price. And then by the time salaries are paid and money start entering people's pocket, the little money you have, you go to market, it cannot face the reality. So inflation will just be set on a hill, and it certainly rolls faster. But this time around, ESP is yet to elapse, but they've already announced the medium-term national development plan, which is a good move. So in my opinion, these policies, if properly implemented, will certainly has the capacity of job creation. And if you look at the way it was programmed, that 340-something billion that this medium-term development plan has, medium-term national development plan is anchored on, has 84 to 85% dependence on private sector, while the federal government and state government has their own share. I think the share for the federal government is amounts to about 4 to 7 trillion annually, meaning that the component of our capital budget should be about 4 to 7 trillion annually. And if you look at the 2022 budget already, the capital budget is it's about 4 point something trillion. So the economy is already fitting within that equation to ensure that this medium-term national development plan delivers as planned. But that is based on a lot of assumptions that security will be tackled, that all those challenges that halt production from rural areas in terms of agricultural produce coming to the market in the town, in towns, will be addressed. So these are some of the assumptions. But in general, generally speaking, all the parameters that the development plan, the medium-term development plan is anchored upon, looks okay in terms of projection, because inflation already is on the downward trend. GDP is already growing fast. All we need to do is to sustain that GDP growth and ensure that it's inclusive. Inclusive GDP is growth that creates jobs and wipes out poverty. But nominal GDP just growing is the figures just climbing, and nobody's seeing the impact out there. And the only way you can close that gap is to use income redistribution policies to ensure that people who are excluded in the equilibrium of job creation have access to job, have access to a small credit to finance their businesses. Students can go to school and they are sure it's safe. Women can go to market and they are confident about how much they have and what it can buy. Right. This is how economic growth translates into impacting real people.
Okay. Now, from your explanation, it looks like Nigeria has quite a plan, but many would say we still see a lot of borrowing going on.
We have a serious revenue challenge right now in Nigeria, and that's because our non-oil sector, all the factors that are supposed to drive non-oil sector, have been affected by insecurity. Agriculture is a major component of the non-oil sector. Then, in as much as we are all looking forward to expanding or taking advantage of the opportunities in the gas sector, for now, the debt of infrastructure we have in the gas sector is still affecting our potential to maximize what we can get from gas sector. So what we have for now to get our revenue from still remains oil and farm produce. But farm produce has been distorted by insecurity. If you know what it means to farm tomatoes in the villages and get it to town, onion, potato, these tiny things. In fact, even watermelon that used to come from Maiduguri to Abuja, these tiny things, as little as they seem in the economic equation, when you sum them up, they play a very huge role in creating additional revenue to the non-oil component. So for now, our major non-oil component includes taxes from customs, value-added tax, company income tax. And if you look at the whole idea of how much tax holidays we give to very big companies, it's also affecting what we get from company income tax. Value-added tax depends on consumption. If people are not consuming, value-added tax will not come. So, and that's why recession affecting consumption is a very terrible thing. At the sub-national level, at the level of the states, the major revenue for state government is pay as you earn. This tax on salaries, pay as you earn. But unemployment means pay as you earn for many states will be low. Many of our states are agriculture dependent, I beg your pardon. But so long as there's insecurity, farmers are scared of going to the farm. Their IGR internally generated revenue will be low, and ultimately they will still be looking up to the monthly federal allocation from the federal government, and federal government will not get what it expects if crude oil price at the international market is not stable. Right now we are doing about $80 and above. So the best we can do now is to save as much as we can save from crude oil, while ensuring that sources of insecurity we can control does not come up again, like what is happening in the Niger Delta. Because if we don't produce crude oil, we won't sell. So ensuring that the Niger Delta remains calm is a very critical policy step right now. Otherwise, any distortion there will affect our quantity, and no matter how the price goes up, price multiplied by quantity, our revenue from it will be low. So in summary, in as much as we have all these plans, what I'm saying is that it is anchored on stable crude oil prices. Any shock in the international market on crude oil price will badly affect the Nigerian economy. Why that is on the one side, what the government have, the source of revenue to the government right now remains borrowing. That's why, in as much as many of us know the long-term impact of borrowing on generations yet to be born, on debt servicing, it still remains the viable option for the government. But the right thing now is to ensure that government borrows from sources that it can easily repay, and use those borrowing on projects that people can see, and people can actually see the project impacting their lives.
But do you think Nigeria will be able to borrow enough to fund these investments?
No, we'll not be able to borrow enough. That's why the medium-term national development plan put 85% of its revenue projection on private sector. Now, the private sector on its own, it's not ghosts. Private sector is people. It needs roads, infrastructure, lights, electricity, stable macroeconomic environment to operate. So that revenue we're expecting from the private sector, if the domestic economy is not balanced, it's not stable, it will also scare off private sector. And that's why what economists do generally is to use monetary and fiscal policy to see how we can attain macroeconomic stability. And on the part of monetary policy, you have the CBN. On the part of fiscal policy, you have Federal Minister of Finance and every other person on the expenditure side. Recently, the central bank introduced what they call 100 for 100 policy for production and productivity, for production in the private sector. That policy is simply to grant a loan of 500 billion maximum, and if you want more, CBN have to agree, to 100 companies in 100 days that will be able to produce goods and services that will cover the domestic supply gap that we have, so that we will not look towards importing those goods, but we are sure that we have alternative people producing it here. Because the more we import where our domestic capacity is weak, we are weakening the value of the dollar. And with importation comes internationally transmitted inflation. So the inflation we have here domestically, plus that we're importing. And don't forget, for every import you make, you are exporting jobs. You are creating unemployment for someone. So the whole idea is just to ensure that monetary policy and fiscal policy creates an environment that will make private sector investment attractive, so that when they grow in profit after tax, their contribution in tax will also be high, and they can now have extra fund for corporate social responsibility and to contribute their quota as organized private sector in funding the medium-term national development plan through our PPP arrangement. So ensuring that the domestic economy is stable is a very important point for private sector to be able to stay in business and to contribute their quota to the overall growth of the Nigerian economy.
Okay, before we wrap up quickly, the National Development Plan, according to experts, is supposed to provide job opportunities. How is this going to come along?
Well, in terms of paper, certainly any plan is, the expectation is that it will create jobs. But in an era where the economy is almost digital, where people have a nice ratio of internet mix with physical office mix, if deliberate policies are not made to ensure that any business operating is 40% online, 60% physical, or 60% online, 40% physical, those jobs will be created, but it will be created for people that are outside the Nigerian economy. For example, so long as we use Facebook, for instance, we are creating jobs for Zuckerberg and the rest. All our data we're using. Okay, in fact, a very good example. See, for any network you use, and you buy your data using your bank app, you are creating unemployment for the girl or guy who sells recharge card on the road. So there must be a deliberate policy, even from on our parts, to say if I'm buying 1,000 recharge card this week, I'll buy 400 naira from my bank, 600 I'll buy from that lady or that guy on the road. If the medium-term development plan is not crafted or oversighted like this, every job it will create, after the people who have made made money from the plan have done so, they will not find it attractive to stay in the economy. So it's important to ensure that the medium-term development plan in terms of implementation is oversighted. That's the point I'm trying to make. So that those who are benefiting from CBN loan and all the loans that the government will be giving actually produce for Nigerians, sell to Nigerians, and employ Nigerians. And that's where also the Local Content Act also comes in, to ensure that at least whatever you are doing, 80% of the people and resource you are using comes from the Nigerian economy. So yes, it will create job, but that job will not come automatically, because people are looking for cheap ways. If people can connect their business online, nobody wants to employ anybody. But the government must insist that for anybody benefiting from this plan, you must have an office with at least 5 staff, and then your internet channel must have this capacity or that capacity. So we're in a period whereby we need to regulate. What the government does is to regulate the economy. So it's important to regulate and watch how this implementation will be carried.
All right, thank you so much, Dr. Terfa Abraham, for joining us in the studio once again. Yes.